Did Nvidia just save the entire market, or are we all walking straight into a massive bull trap? That's the question every trader is asking this morning, and the charts are telling a very different story than the headlines. Before we get into the full breakdown, make sure you hit that like button and subscribe so you never miss these daily market updates. Your support genuinely helps push the goal of helping everyone make more money and create generational wealth. I appreciate every single one of you who takes that quick second to click it. Let's start with a quick rundown of the only headlines that matter right now. Nvidia delivered a massive double beat with one of the strongest forward forecasts we've seen in years. They announced a $100 billion AI infrastructure partnership with Brookfield and a $10 billion investment in Microsoft tied to Anthropic. Meanwhile, the SPY and QQQ confirmed daily downtrends earlier this week. Microsoft printed a fresh weekly lower low, and the entire AI sector is swinging wildly on this Nvidia aftershock. So let's break this down honestly. Is Nvidia strong enough to flip the trend back up, or did we just witness the biggest bull trap of the month? On the SPY, Tuesday officially confirmed a daily downtrend with a clear lower high and a new lower low. When we zoom out, the weekly and monthly trends are still bullish, so this isn't a crash or correction, but it absolutely changes how we trade. A confirmed downtrend means we now expect counter-trend rallies that eventually form lower highs, and those lower highs set up better opportunities for put trades. Tuesday's lower low came in around 657.25. We stayed below 663.25 for 2 straight sessions, rejected the 50-day moving average, and had no sign of buyers stepping in at or above that level. Then Nvidia's earnings pumped the entire post-market, and we ended the after-hours session right near 670, which sits almost exactly at the 50-day moving average. But the level above us that really matters is between 674 and $675. That area lines up with prior supply and the 61.8% Fibonacci retracement, so it has strong confluence. If SPY pushes into 674 or $675 and breaks above it with conviction, we have to consider the possibility of a bullish or neutral shift forming, which then allows us to target $685 for an equal high. If we hit that level and reject, then the downtrend remains intact, and we start looking for puts opportunities that target $663, then $657s, and even $654 if weakness accelerates. We also need to pay attention to the possibility of SPY opening at $670, fading to fill the gap towards $668.75, and then attempting to rally back towards $674. If we break below $668.75 and retest it from below, the downtrend continues and our targets shift back towards $663 and lower. Bottom line, SPY must close and hold above $675 to break this new daily downtrend. Anything below that keeps the market vulnerable. The QQQ is even weaker than SPY right now. It's down nearly 7% from all-time highs, compared to about 5% for SPY, and Tuesday created a new daily lower low at $590. Wednesday's attempt higher rejected the 50-day moving average right at $606, and now pre-market trading has QQQ sitting just under the next major decision area between $611.50 and $612. That zone is the key. If we open near that level and break above it, the next natural target is $670.50. But if QQQ pushes into the $612 area and rejects, the more likely path is a pullback to close the gap and revisit 606. If the market loses 606 and cannot reclaim it, the next downside target becomes $599.50, and any move below $599.50 over the coming days opens the door to retesting the weekly low at $580. That would be a major red flag for the tech sector because it would confirm deeper unwinding of the AI-driven rally. Weak tech starts weak indices. Nvidia cannot carry the entire NASDAQ on its back. Nvidia delivered a monster quarter. They crushed revenue and EPS, guided higher for 2026, and announced 2 huge partnerships: a $100 billion AI infrastructure project with Brookfield and a massive $10 billion Microsoft investment tied to Anthropic. The market loved it. But here's the key detail the headlines ignore. Nvidia never made a lower low on the daily chart the way the rest of tech did. The stock held $180 perfectly. That means Nvidia is not officially in a bearish daily trend. It's actually still neutral and leaning bullish if today plays out with strength. Pre-market trading around $197 puts Nvidia very close to the one level that matters, $200. If Nvidia pushes over $200 and clears the next pivot at $202.40, that wipes out the last lower high and forces us to consider a bullish daily trend flip. If we retest that range and hold, then the next upside target becomes $206.50, $206.50. If Nvidia rejects $202.40, a pullback toward $195.75 or even $192 would be completely normal and would give the stock a chance to form a new higher low. However, if Nvidia breaks below $192 and starts moving toward $188 to fill the gap, that would be a major sign of weakness and would likely drag the rest of tech with it. This is one of the most important charts to watch today. Microsoft did something this week that it hasn't done in a long time. It set a new weekly lower low. That confirms the double top pattern we talked about on Monday's video and adds pressure to the broader market. Now the real test will be whether Microsoft can push back toward the neckline at $498. If it reaches that area and rejects it, that becomes one of the cleanest put setups in the entire market, with a very reasonable target at $489. Keep in mind that SPY and QQQ will struggle to make meaningful progress to the upside without at least some participation from Microsoft. So watch how MSFT behaves as it approaches that neckline. A rejection there could confirm a bigger leg down. Apple has shown surprising strength despite weakness in the broader market. While tech sells off, Apple has been forming a daily balance range, which is a sign of price digestion and acceptance at the highs. Because we're sitting near the midpoint of that range, this is not an area where I want to trade. The real opportunities come only at the edges. If AAPL pushes back toward the top of the range at $277 and breaks above it, then retests it for support. That is where long trades make the most sense. If the market stays choppy or pulls back, I would rather watch the bottom end of the range near $264. Long trades set up off the bottom if it holds, and put setups form if we break beneath $264 and retest it from below. A drop under that level could take us toward $258.65, where the 50-day moving average also sits. Amazon has been under heavy pressure for 2 straight weeks, and the daily trend is clearly bearish. We haven't created a new weekly lower low yet, but that level is closer to $211 and sits right near the 200-day moving average. So that's an area I'm watching carefully. Wednesday's candle, though, provided a little hope. We printed a long wicked hammer candle that closed above $222.75, which can sometimes signal a short-term counter-trend rally. Pre-market trading near $226 puts Amazon right under the 50-day and 100-day moving averages, which will act as heavy resistance. If Amazon pushes over $226 and immediately fails, that gives us a clean put setup back toward $222.75. But what interests me more is whether Amazon can drift lower over the next couple of sessions toward the 200-day moving average near 216. That's where a real snapback rally could form, especially heading into Black Friday and Cyber Monday. Those events typically lift Amazon, so patience could pay off. Google ripped higher yesterday right out of the gate, jumping nearly $11 in the first 8 minutes on renewed AI optimism around Gemini 3. That huge burst created one clean entry early, but the move was so quick it was hard for most traders, including me, to catch. Even though Google rejected the all-time high level, we still closed above the previous all-time high at $291.65, and pre-market trading has pushed us back toward $298. The cleanest long setup here would be a pullback to $291.65, followed by strength off that level. Alternatively, if the stock pushes through $303.80, retests it, and holds, that would put Google into true blue sky territory, where calls make a lot of sense. Tesla broke down from a large balance range earlier this week, and that breakdown created a significant amount of overhead supply. That supply makes it very difficult for Tesla to sustain any meaningful upside without a major catalyst. Right now, the chart is forming a bear flag, and we're also rejecting the bottom of the prior balance range, both of which signal weakness. There are only 2 setups here that I like. The first is a rejection off $412.50, which sets up puts targeting $397. The second is a breakdown below $396.70, which would invalidate the bear flag and open the door toward $386.25. If Tesla moves below $386, there's still room to fall toward $365 due to thin structure created back in September. Tesla moves aggressively, so unless you're experienced with its options, stick to shares or be extremely cautious. Palantir broke down from its balance range and has been rejecting the lower edge for 2 days in a row. This morning, NVDA's strength is pushing Palantir back toward the balance range low at $171.25, and that level becomes the deciding factor for the rest of the week. If PLTR can break above $171.25 and retest it successfully, you can look for a counter-trend move to $176. If the stock rejects $171.25 again, that's a straightforward put setup with a target at $163. This is one of the cleaner setups of the day. AMD broke its double top neckline at $226 and formed a new lower low yesterday. Even though AMD has shown more strength relative to NVDA over the last couple of months, the technical trend is short-term bearish. Pre-market trading around $235 puts AMD in a spot where sympathy strength from Nvidia could push it higher. If AMD can break above $235.85 and retest it successfully, a counter-trend long makes sense with a target near $247. If AMD can't sustain the pre-market strength and we fall back below $226.65, the double top pattern confirms, and puts make sense with a target at $215, where the 50-day moving average should provide support. Robinhood recently broke below its double top neckline, but has now reclaimed that level at $120.50 during pre-market trading. Today, I'm watching two scenarios very closely. If Hood can hold above $120.50 and retest that level for support, then we can look for a counter trend move toward $125.85. If Hood cannot hold $120.50 and breaks down again, a rejection of that level on the retest becomes a clean put setup targeting $114. The overall trend is still bearish, so either we get a temporary push up to form a new daily lower high, or we break down and continue toward equal lows. If this breakdown helped you build your game plan for today, make sure you hit that like button, subscribe to the channel, and turn on notifications so you don't miss the next breakdown. Your support helps me keep this content coming every single day, and it helps push us closer to monetization so I can expand the channel even more. Trade smart, manage your risk, and I'll see you in the next one.